Gautam Duggad is with us. He's our market master today, head of research institutional equities at Motilal Oswal Financial Services. Gautam, best wishes in the new year. Thanks very much for being here on CNBC TV18. Prashant this side. Let's just kick it off with earnings. And I was looking at the earnings preview, so the detailed note which you guys put out. And I just want to begin with IT services because there has been so much talk and debate about what now. Stocks presumably have moved up even before recovery there has started. What should we expect in the third quarter from IT services, and what would you want to hear from companies? Because results we will get from Infosys and TCS on Thursday.
Hi, good morning, Prashant and Sonia. Happy New Year to you and your viewers. Thanks for having me. Yes, this quarter is going to be a bit lackluster, and given the fact that you have more furloughs this time, and the commentary which has come in, from the other companies too over the last 3-4 months, the expectations are really muted, Prashant. So much so that just statistically, this is the first quarter after 26 quarters where we are expecting a YOY decline in IT earnings. It's not much; it's just 2%. And if any big company reports a slightly better other income, it might even turn out to be a flattish quarter. But yes, at least in the preview, the number that we're expecting is a minus 2-3% kind of an earnings print. But besides number in IT, what always matters is the guidance. What kind of commentary they have for FY25. Maybe it's not the right time for the companies. They may not speak much about FY25, but some clarity and visibility on the demand will definitely help, because we have seen big companies cutting guidances multiple times over the last 8-9 months. I remember when we started the year in April, our expectations for IT for FY24 was earnings growth of 10-12%. And as we are in January now, that expectation has gone down to just about a flat number for FY24 over FY23. So some bit of visibility on demand will definitely help. Margins are fine, I think, for IT sector. They're normalized after the pre-COVID levels. But demand is something which constantly remains a worrying factor, especially in the large cap IT, because mid cap IT seems to have done reasonably well over the last 2-3 years. Some of them are at crazy valuations also. But yes, to answer your specific question, the demand visibility is something which I think most of the street will be glued to.
Okay. Gautam, hi, good morning. I want to talk about the auto sector because in your note you mentioned that BFSI and the auto sector will continue to lead. And you have some of your top picks in that sector, including names like M&M, etc. But I want to know that the rally has been quite swift, right, in the last 1 year. Do you see even spaces like two-wheelers, for example, build on to these gains this year?
Looks like so, Sonia, because auto sector has come back into reckoning after a very flat earnings for 5 years. In FY18 to FY23, the Nifty auto earnings remained flattish. In between, they went up and down, but it ended FY23 exactly at the same point where the FY18 earnings were. And then in FY24, we have seen earnings go up 100% for auto sector. So from 28,000 odd crores to 57,000. And the rally that you mentioned in auto sector is partly a reflection of what has happened to the underlying demand, margins, and consequently the earnings growth. As we step into FY25, obviously this large base will play some spoil sport in a overall aggregate scenario. Our expectations for full year FY25 is 10% growth. But yes, for the quarter, that is third quarter FY24, we are building in a 35% growth in auto sector earnings with decent margin expansion. Auto volume numbers are already there, they have been disclosed. So as far as the sector is concerned, from our model portfolio stance, we moderated our overweight there. We are largely equal weight now. So about a year back, we had close to 200-300 basis point of an overweight on auto. Now it is a bit more flattish, equal weight kind of a scene, with M&M and Hero being our top idea, as you rightly mentioned. Two-wheeler, obviously, there is clear positive shift in demand patterns over there, as we've witnessed over the last 2 quarters. While the festive season has not gone down too well, as one would have imagined or envisaged a couple of months back, but the valuations for two-wheelers, specifically both Hero and Bajaj, are still kind of okay, in the sector. And on four-wheeler, our preference for a long time has been with M&M.
Okay, all right. Hi, Gautam. Good morning and good to see you in. Wishing you a cracking 2024, Gautam. I wanted your view on the domestic-facing themes. They have really been the way to play this market. But getting into an election year, maybe we'll see some order intakes that will slow down. Some of these companies could see a bit of a slowdown in terms of order intake. How do you approach them? Do you believe some of them still offer good opportunity? Because the problem is in the last year, as orders started coming in, market capitalization more than reflected that. Your view?
Nigel, yeah, hi, Happy New Year. But Nigel, that's how this sector has always behaved in cycle, right? Sometimes the stock prices or market caps anticipate what is going to happen in the order books, and it discounts it too fast. And that is exactly the situation we are in right now. If you look at the kind of market cap creation which has happened in industrials, defense, power, all those kind of sectors in the last 18, 24 months, obviously the business has not kept pace with the market cap growth to that same extent. So a lot of the good news is already there in the price. But the sector has come back into the reckoning after almost a decade of going nowhere. And there are many sectors like that, in industrials being one, power being another one, real estate, utilities. These sectors had been forgotten from 2012 to almost 2020-21. It's only in the last 2 years you're seeing some buoyancy happening there, and for the right reasons. The order book creation, the capex creation, infra as a theme, PLI as a theme, manufacturing as a theme, all of them are coming together. And that is what is resulting into a lot of positivity around the capex theme for this country. We've seen government leading the capex earlier part of the cycle. Now there are hopes and some sort of signs that private capex will also follow. The problem, Nigel, in this sector is of valuations, right? We are positive on this space. We have a big overweight there. We have added ABB also. We have Kirloskar Oil and L&T. We've been holding a big position for a long time now. We've also increased our weight in real estate big time from 1% to almost 4% now. So while we are positive, we are fully cognizant of the fact that valuations are quite rich and companies will have to deliver on execution because the price for not delivering, given where valuations are, can be quite brutal.
All right. Well, I just want to point out that there are a lot of stocks which are moving around right now. GMDC has picked up quite a bit of pace. I think I checked out, it's a 10% rally that we're seeing on GMDC right now. And of course, there have been a lot of, reasons, positive updates coming in over there. They've received their environmental clearance for the capacity expansion approval from 3 million tons per annum to 5 million tons per annum. So as even Nigel was highlighting earlier, so GMDC is a big mover, 10% higher now.
GMDC, Sonia, is one of those stocks. Any bit of good news will be very, very good. I believe, I'm just trying to get further details, but this expansion that they got actually from this particular mine, there's not much output as of now, though they've got an expansion. So any trigger of good news, we see the stock flying away because the street is so optimistic out there. So let's see how this goes. But I think the bigger trigger for them is how their volumes ramp up with regard to the lignite business and what kind of an opportunity the rare earth minerals. For the last, I think, 2 years, we've been talking to the management. They're saying they're working on it. So we'll have to see numbers coming out of there as well. For the time being, I remember we covered the stock 2 years ago, 135. Now it's nearly 500 rupees.
One of
to show
those,
the kind of positive rub off the kind of interest in the stock.
Interest in the stock, and it's created a lot of wealth for shareholders. So that's a good thing. But Gautam, I was going through, since we're talking mid caps, right? Let's take a look at your portfolio as well. One of the stocks that you've liked is this entire consumption space. So whether it's Zomato, whether it is Indian hotels, a couple of others in this space as well, Lemon Tree Hotels. Do you think the hotel space has become a little bit of a crowded trade now? Because anyone and everyone knows that there are some big events underway now with this whole Maldives situation as well. Lakshadweep is picking up in a big way. There's the Ayodhya launch that's happening later this month, the Ram Mandir opening. So do you think a lot of this has been priced into the hotel space, or do you think there's more to go?
Sonia, yes, it will be foolish to disregard the fact that a lot of that is already in the price. But also fact remains that this is a sector which has seen a big downturn for almost 10 to 12 years after 2008 to 2020. Possibly we are in the second or third year of an upcycle. And I think this upcycle can last few more years because your supply in a basic, it's not a commodity sector, but it's a cyclical sector. In a cyclical sector, supply always has a very important role to play in the pricing and does the operating leverage and consequently the market cap creation. Right now, where we are sitting, it looks quite conceivable that for the hotel sector, the demand-supply dynamics can remain in favor of the hotel players. And given the fact that you're seeing explosion of demand in the domestic side, given the events of the last few days, and also the fact that a lot of events have taken place in CY23, some of them could continue in CY24. I think ARR, occupancy, RevPAR, a lot of those parameters are still giving you green signals on hotels. So we will remain very constructive here, which is why we've been holding both the hotel stocks in our model portfolio for more than a year and a half now. And some of them are also part of our CY24 top ideas.
All right, Gautam, we will leave it at that. But